Hey everyone, welcome to Michael's Fortune Bread. Ever thought about diving into the stock market? It's a wild world out there full of potential profits and nail-biting moments. People making fortunes overnight, others losing their shirts. Stock investing, when done right, builds long-term wealth. It's about understanding businesses and making smart decisions. I'm here to break it down step by step. So, what's the secret sauce? How do those Wall Street gurus do it? Well, it's not magic, and it's definitely not about relying on gut feelings. Successful investors have a system, a framework they use to analyze opportunities and make informed decisions. They do their homework. They understand the companies they're investing in, the industries they operate in, and the broader economic landscape. You need a strong foundation of knowledge and a clear plan to guide your decisions. Over the next few minutes, we're going to demystify the world of stock investing. We'll explore different approaches, dive into the nitty-gritty of analysis, and equip you with the knowledge to make smarter investment choices. So buckle up, get ready to learn, and let's unlock the exciting world of stock investing together. Now, let's dive into the world of technical analysis. Imagine a stock chart as a company's fingerprint, each twist and turn telling a story about its past performance. Technical analysts scrutinize these charts, looking for clues, patterns, and signals to predict future price movements. They believe that by analyzing these patterns, they can get a glimpse into the minds of other investors and anticipate which way the market might move next. Now, while technical analysis might seem intriguing, it's important to approach it with a healthy dose of caution, especially if you're a beginner investor. The market is influenced by a myriad of factors, from economic data to geopolitical events and even investor sentiment. While technical analysis can be a useful tool in the short term, relying solely on charts and patterns can be like trying to predict the weather by looking at a single cloud. And relying solely on technical analysis can lead to impulsive decisions based on short-term fluctuations rather than sound investment principles. Here's another important factor to consider: the rise of algorithmic trading. Sophisticated AI programs execute a significant portion of trades. These quant funds analyze data in milliseconds, identifying patterns and executing trades faster than any human. As an individual investor, you're like David against Goliath. Technical analysis can help with timing trades, but it's just one piece of the puzzle. All right. Let's shift gears now and talk about something called fundamental analysis. Think of it like this. If technical analysis is about reading the company's fingerprint, fundamental analysis is about understanding its overall health and the environment it operates in. This is the big picture stuff, the overall health of the economy, interest rates, inflation, government policies, all those things that can make or break businesses, and in turn, their stock prices. Just like a ship sailing in rough seas, even the best company can struggle if the economic winds are blowing against it. Decoding the economic indicators, interest rates, inflation, and GDP growth. Economists and investors use a bunch of economic indicators to gauge the health of the economy. One of the most important indicators is interest rates. These are set by central banks, like the Federal Reserve in the US, and they influence how much it costs businesses to borrow money. Low interest rates act like a shot of adrenaline for the economy, encouraging businesses to expand and invest, which can boost stock prices. But when interest rates rise, it becomes more expensive for companies to borrow, potentially slowing down growth. Navigating global economic interdependence. A world of opportunities and risks. In today's interconnected world, it's not enough to just look at the US economy or your local economy. We live in a globalized world where events happening on the other side of the planet can ripple through financial markets at lightning speed. For example, a slowdown in China, one of the world's largest economies, could impact demand for goods and services worldwide, potentially hurting the bottom lines of multinational companies. This global interconnectedness presents both opportunities and risks for investors. Riding the waves of industry cycles. Now, let's zoom in from the big picture of the overall economy to the fascinating world of industries. Just like the economy goes through cycles of growth and contraction, industries have their own unique rhythms and trends. Some industries, like technology or healthcare, are considered growth industries. They are constantly innovating, disrupting the status quo, and have the potential to grow at a faster pace than the overall economy. Understanding these industry cycles is crucial for investors. Unveiling the forces shaping industry dynamics. Each industry has its own unique dynamics, driven by factors like competition, regulation, technological advancements, and even consumer preferences. For example, the rise of e-commerce has completely reshaped the retail landscape, creating winners and losers along the way. Some industries, like pharmaceuticals, have high barriers to entry, requiring massive investments in research and development. This limits competition and can lead to wider profit margins for existing players. Remember, the name of the game is to identify these trends and position yourself accordingly. Navigating the information maze, finding reliable industry insights. So how do we, as individual investors, keep our fingers on the pulse of these industry trends? Well, luckily, we live in an information age. There's a wealth of resources available, but it's important to separate the wheat from the chaff. One of the best places to start is by reading industry reports. These are like deep dives into specific industries, analyzing their current state, future outlook, and key players. Another great resource is industry-specific publications and websites. Unmasking the business, delving into company-specific analysis. Alright, we've covered the big picture of the economy and the dynamics of different industries. Now let's zoom in even further and put on our detective hats to analyze individual companies. So it's crucial to understand what that business does, how it makes money, who its competitors are, and what its future prospects look like. Decoding the financial matrix, unveiling the story behind the numbers. Now, while understanding a company's story and its products or services is important, we can't forget about the cold, hard numbers. That's where financial statements come in. Those mysterious documents filled with tables, figures, and accounting jargon. The key is to focus on the essential elements that tell you about a company's financial health and performance. Think of these financial statements as a company's report card, giving you a glimpse into its past performance and potential for future success. One of the most important statements is the income statement. Beyond the balance sheet, assessing management quality and growth potential. Numbers only tell part of the story. A skilled management team can turn potential into market leadership. Evaluating management quality can be tricky. Read company filings and listen to earnings calls. Look for companies adapting, innovating, and expanding. The tech titan and the coffee giant, illustrating industry and company analysis. Let's bring all these concepts to life with some real-world examples, shall we? Imagine two companies. One, a tech titan known for its innovative smartphones and gadgets. The other, a beloved coffee giant with a global empire of cafes. Now, from an industry perspective, these companies couldn't be more different. The tech industry is all about rapid innovation, fierce competition, and the constant pursuit of the next big thing. The coffee industry, on the other hand, is more stable and predictable. But within these industries, both companies have established themselves as leaders. Case study the rise and fall and rise of a social media darling. Let's look at a case study that illustrates the importance of looking beyond the hype. Remember that social media company everyone was talking about? The one with the meteoric rise in user growth and the charismatic CEO? For a while, it seemed like nothing could stop them. Their stock price was soaring, and investors were clamoring to get a piece of the action. But then, cracks started to appear. User growth slowed, competition intensified, and data privacy concerns plagued the company. Investors started heading for the exits, sending the stock price tumbling down. So, what happened? In the rush to chase growth, the company lost sight of the fundamentals. The power of knowledge and the long-term perspective. So, there you have it. We've journeyed through the world of stock investing. Remember that tech titan and that coffee giant. Both achieved success by focusing on fundamentals. Stock investing requires knowledge, discipline, and a long-term perspective. It's not about chasing quick riches. It's about understanding businesses and making informed decisions. Embarking on your investment journey. Practical tips for success. Now you might be wondering, where do I go from here? How do I actually start investing? Getting started is easier than you might think. Here are a few practical tips to set you on the right path. Start with education. Read books, take online courses, and follow reputable financial news sources. Knowledge is power in the world of investing. Define your goals and risk tolerance. Understand your time horizon and risk comfort. Start small and diversify. Many platforms allow small investments. Don't put all your eggs in one basket. Diversify to mitigate risk. Be patient and stay the course. Don't panic sell during dips. Investing is a marathon, not a sprint. Stick to your plan and ride out volatility. Never stop learning. Stay curious and continuously expand your knowledge. Make smart decisions and build a brighter financial future.